What's up, investors, and welcome to another video in my monthly series where I present to you my top 3 dividend stock picks of the month. So if you're new to the channel, welcome. My mission and the objective of this channel is to help everyday working Canadians to invest on their own in order to build a steady stream of passive income to enhance their quality of life. So make sure you're subscribed and turn on notifications because I release a video every single month on my top stock picks as well as other content on do-it-yourself investing. So November has been a phenomenal month for the stock market. The US market has hit an all-time high, believe it or not, and the Canadian stock market is not far behind. So the main catalyst, of course, was the positive news we got from those 3 vaccine trials. The stock market is finally starting to see the light at the end of the COVID-19 tunnel. So this is despite COVID cases rising all around the world and very high unemployment rate. If you're asking yourself why and wondering where the disconnect is, the only thing I could tell you is that the stock market is always looking ahead. It's always looking into the future, and any positive and hopeful sentiment drives prices higher. So as the market goes up, however, it gets harder and harder to find undervalued stocks and snag really high dividend yields of 9-10% or more. But there are always some good finds out there if you look hard enough. But luckily for you, you know me and are subscribed to this channel. So I have 4 criteria for all my stock picks. Number 1, it's a stock that I own myself. Number 2, the stock must provide a fairly high dividend yield. 5 or 6% would probably be my bare bone minimum. Number 3, the dividend must be relatively safe and sustainable. And last but not least, the stock needs to have good value. So if ever you want to understand my investing philosophy and strategy in detail, check out my video where I explain that in detail there. But without further ado, let's check out my top picks for December 2020. Alright, so pick number 1 is the Gold Plus Giants Covered Call ETF from CI First Asset. That's the ETF manager. Stock symbol is CGXF. Their dividend is provided quarterly, and right now the annual dividend is $1.14 a share. Keep in mind though, this is the average for the last 12 months. So this ETF holds 15 of the biggest gold producers or gold miners listed on the Canadian or US stock market. The ETF is a covered call ETF, so it uses the covered call strategy, which boosts the dividend income significantly. So looking at the prices now, you could see the 1-year high stock price and yield at $17.46, which was giving a pretty decent yield of 6.53%. But as you could see right now, as of November 27th, the stock price is very discounted in my opinion at $13.11, giving a magnificent dividend yield of almost 9% at 8.73%. So my key points and reasoning for this pick is that gold stocks tend to fall during a very strong bull market. So this is a very well-known stock market trend throughout history. So for those of you who don't know, what happens when the stock market tanks like it did in March and April, investors usually flock to safety. So they flock to gold and gold stocks. But when the opposite happens and the market starts going up and up and up, investors will take their money out of the safety of gold and gold stocks to put it back in equities or the stock market. So this is why it's a pick for this month. So it's been a strong bull market for the last couple of months. So gold prices and gold stocks have been going down. So a really nice time to pick this one up. So gold exposure gives you a hedge or a safety net against equities or stocks during times of big volatility like in March and April of this year. Also, for another reason why I like this ETF is that it's very hard to get consistent income with gold because gold stocks and of course gold bars have very low or no income in form of dividends at all. So this ETF solves that problem. It provides a pretty good dividend yield, although it does fluctuate quarter to quarter. And of course, it's a covered call ETF, so That's primarily the reason why it has such a great income, because the covered call strategy gives you two sources of income instead of one: dividends and option premiums from those covered calls. So a really high dividend yield of over 8%. It's very rare for anything related to gold, and that's why I think this is a great pickup right now. Pick number 2, a stock you probably never heard about, is the Chemtrade Logistics Income Fund. Stock symbol is CHE.UN. So the dividend is monthly and the annual dividend is 60 cents a share right now. So Chemtrade operates a diversified business. They provide industrial chemicals, basically industrial chemicals and services to customers in North America and all over the world. So even though it's an income fund, it has that .UN like at the end of the stock symbol, like REITs do and other closed-end funds. I consider this as a single stock because it's really a one business. It's not like an income fund that has multiple stocks in them. So the 1-year high of this stock was $11.45, which was giving a great dividend yield of 10.48%. But this is before even the dividend reduction, which we'll see in a minute. So as of now, today, the stock price is only $5.14, so a huge discount, less than 50% of its 1-year high. So right now you're getting a really high dividend yield of 11.67%. So my key points and reasoning for this one: why did this stock take such a beating? Well, that's because they provide chemicals primarily to the oil and gas industry. So the demand for their products has fallen this year because of the low oil demand thanks to COVID-19. So I think that the demand for their products will only grow with time because with the oil price recovery, which is already underway. So it's a good time to pick this one up, in my opinion. Like I mentioned before, this one is set up as an income fund, and we all know that an income fund, like the name says, its goal is to provide consistent dividends to shareholders, so that's a plus. And Chemtrade reduced their dividend by 50% this year, from $1.20 to 60 cents. This happened in March, further reducing their stock price even more, but making the dividend much more sustainable. So I have the quote here from the CEO of the company that talks about the dividend reduction. So he says, "While we continue to believe that our distribution is sustainable in normal times, these are not normal times. In times like these, financial prudence is essential." Like the sound of that. So accordingly, to protect our balance sheet and maintain financial flexibility, we have reduced our monthly distribution to 5 cents per unit, or 60 cents a year. We intend to use the excess cash flow to strengthen our balance sheet by reducing leverage and etc. etc. So this is why I really like this stock pick. They reduce their dividend in half, which just means the dividend is much more safe and sustainable. And at this price, I think it's a no-brainer to pick this one up. I think it's a good deal. I think that the stock price will eventually increase once the demand for their products will increase, which it will, because oil already started going up. So I think they'll have a much better year next year. Pick number 3 is Morguard REIT. Stock symbol is MRT.UN, not to be confused with MRG.UN. So there are two Morguard REITs out there. There's this one here, Morguard REIT, and then there's the Morguard North American Residential REIT. So with this pick, I'm talking about MRT.UN. So this is a small cap Canadian REIT managed by the Morguard Corporation, which has its own stock symbol as well, MRC. And it owns 47 commercial properties in 6 provinces in Canada, primarily office and retail properties, and a very small group of industrial properties. So looking at the 1-year stock price, you'll see the huge discount right now. So it was $12.74, which was giving a dividend yield of 7.54%. But this is before the dividend reduction, which we'll see in a second. So as of now, today, November 27, the stock price is still less than 50% of its 1-year high at $6.12. So right now it's giving a nice dividend yield of almost 8% at 7.84%. So my key points and reasoning for this one is not rocket science. It's pretty much the same like my past couple of months, my REIT picks for the last couple of months. So commercial real estate, especially retail and office, is very undervalued right now thanks to COVID-19. So Morguard REIT took an especially big hit, more than the other REITs in my opinion, and was slower to recover compared to them because they own several enclosed malls. So enclosed malls, which is retail, took a big beating because of the COVID-19 business closures. And because of this, the REIT reduced their dividend by half, just like Chemtrade in May. So it went from 96 cents to 48 cents. So because of the dividend reduction, however, the payout ratio is now at 66.7%. That's the latest figure from their latest Q3 results. So 66.7% is a very conservative and sustainable payout ratio. So I think the dividend is really, really safe. So in my opinion, this is a fantastic buy right now in terms of value at this price, because the dividend is safe and there's plenty, like we saw before, there's plenty of upside in the share price. I mean, at $6.12, it was $12.74 just a year ago. It doesn't really make sense to me. So I think this one, and if you look at the chart, you could see that it's already started going up and up and up. I think it will just continue because at $6.12, it doesn't make any sense to me. It's still property, it's still valuable property. So not only is the dividend safe, but you're looking at some real potential to make some capital appreciation on this one. So those are my stock picks for the month of December, guys. I hope you enjoyed the video and decide to invest so you too can make some easy passive income. Please hit that like button. I would really appreciate it. And let me know if you agree or disagree with any of my picks, or have any picks you would like to share yourself. Just put that in the comment section. I'll be more than happy to review them and provide my opinion. Finally, make sure you're subscribed and turn on that notification button not to miss out on next month's stock picks, as well as my other content on income investing. My mission remains the same. It's to help working Canadians to build their own stream of passive income to enhance their quality of life and ultimately reach that magnificent goal of financial independence or financial freedom. So with that, take care, guys. See you next time and stay safe.